Welcome to the Secure the Deed podcast. I am your host, Laisha Bailey, president of the Greater Cleveland Realtors Association. We are an organization of real estate professionals who believe in democracy and housing. And this initiative here, this podcast, is to bring the information to the people so that you are informed on your home ownership journey. Whether you're trying to buy a home or you're already in a home, we are focusing on sustainable home ownership in our communities and a way for everyone to be informed so that when there's time to make that choice, you feel confident and great about the decision that you're making. Today, I am here with a few of our partners from Third Federal Savings and Loan, who are a proud sponsor of this podcast, who are here to bring you some information on getting started and getting ready to purchase your home. So I am going to introduce them and then let them introduce themselves to you so that you are comfortable with our guests and that they feel like family. So first, welcome Jason Wagner and Jennifer Robinson from Third Federal Savings and Loan. Thank you for being here with us today.
Thanks for having us. Again, my name is Jason Wagner. I'm with Third Federal. I am the CRA officer. I have been in banking for 25 years, and for the last 12, I've been with Third Federal.
All right.
Thank you, Laisha. I'm Jennifer Robinson, and yes, and I'm with Third Federal. I've been with them for 25 years. And really glad to be here in this great opportunity.
Okay, so we got a lot of experience at the table. And just let me ask, by the way, are you both Cleveland natives?
I am.
Okay.
No, unfortunately, I am from Summit County.
You're from Summit, but that's family. You know, we just right around the corner. We're right around the corner. King James, right?
Yes, that's it.
Exactly. We all family with that. He connected us all. So thank you again for partnering with us in this venture. I know you are going to bring information that people can use and find valuable, and you're going to tell us a little bit more about your products and services. But first, as we get to know you, but let us know about your organization. Tell us about Third Federal. Tell us about your commitment to community banking.
Third Federal is a leading provider of savings and mortgage products. We operate under the value of love, trust, and respect, commitment to excellence, and fun. We were founded in 1938 by Ben and Jerome Stefanski. We operate in 21 full-service branches in Northeast Ohio, one loan office in Columbus, one loan office in Cincinnati, and 16 branches in the Florida area.
All right. All right. So with Third Federal, I know that you all have a very huge presence in the Slavic Village neighborhood. And we know that Cleveland, historically, when there has been mortgage crises, that our neighborhoods and our communities, as well as parts of Summit County as well, tend to get hit hard. So can you just talk a little bit about what you do to prepare people for home ownership and to ride the waves of the real estate market?
So our mission is to create opportunities for home ownership and financial stability. So we have a program that's designed to walk people through that process of home buying from beginning to end. It's a series of 4 Zoom calls. They're on Tuesdays. They're 6:30 to 8:30. We'll have more information in the
absolutely
to follow that. But they're 4 Zoom sessions. They're 2 hours on Tuesdays, and they go over the home buying process from beginning to end. Once you get through that process, we partner with 12 different organizations who provide credit counseling. So they'll take a look at someone's credit. They'll do a soft pull. They'll look at their income. They'll look at their finances and say, you're mortgage ready. If you're mortgage ready, that counselor determines, there's also down payment assistance availability and our community development product that offers a lower rate.
Okay. And the name of that program is?
It's our Home Today program.
Home Today program. Home Today. Okay. So let's talk a little bit about the products that you do offer and how you have, you look at a client, everyone's unique and individual, their situation and perspective on home ownership. So coming to the table, what products and services do you have to fit different people's situations at that time?
Yes, we have 2 great lending products. We have our Home Ready. It's a low down payment, flexible underwriting guidelines, a lower rate, which makes homeownership more affordable. It also comes with a refinance option. So for those of you who are existing homeowners, you have the opportunity of refinancing with very minimal equity in your home if that's necessary. No closing costs. So it's really great for our communities. And then for our purchase, it also comes, as Jason mentioned, comes with down payment assistance. And just to note, our down payment assistance is available on any lending product that their federal offers, as long as the borrower qualifies for that. We also have a low dollar loan. It's called a fixer upper. It's great. It's for those of you who have your home, you've been in your home, maybe you want to get a roof, or you may want to buy some appliances, or you may want to consolidate some debt or anything of that nature. But the fantastic piece of the fixer upper, it's a fixed rate, and no one will find it anywhere, I'm going to say, on the planet, Jason, right? Nowhere on the planet where you're going to find an equity line that is specifically for our community residents.
So let me add this. So our branches and our customer care area, our loan officers are not commission based. They're paid a salary, so they're not incentivized to put you in a product that you don't need or don't want. We just want to have a conversation and put you in the best product to suit your needs.
Okay.
And we also have the lowest rate guarantee too. So
the lowest rate, the lowest rate guarantee.
Yes.
So you all hit on like three things that are really important. Number one, I heard Jennifer used to talk about affordability, and then also just again realistic budgeting. Like what can you really afford? So when you talk about the down payment assistance and you say all of your products have some down payment assistance component and making homeownership affordable, can you talk about how you look at someone's income, their debt? Can you talk about how you look at what they bring to the table, their work history, et cetera, to qualify them for a loan, and actually making sure that they can afford what they're looking to purchase?
Go ahead, Jay.
Yeah. So as it relates to down payment assistance in our community development lending, there are pretty much three keys to getting to access that. One is income. If your income is under a certain amount, then you're eligible for that. Maybe your income's over that, but you're looking to purchase in a particular area. There are certain areas that also qualify for the reduced rate product and the down payment assistance. Outside of that, when you look at mortgage affordability, or what a bank is going to look at to qualify someone, they're going to look at their income. Their predictable monthly income, their consistent monthly income, gross income. And they're going to look at what are their liabilities. So those things are on the credit report in terms of monthly payments, car loans, student loans, credit cards. And then you add in the payment of the house that you're looking to purchase. So if a loan amount's a certain amount, what is that principal and interest payment plus the property taxes plus the insurance? You add all those things up together plus those obligations divided by your income, and there's a ratio.
And so talking about Mortgage Ready again and that ratio, how does your program Home Today help people understand, how do I get things on, like, let's say I have some credit card debt and I've been trying to pay it off, but it's keeping me from being able to get a loan. How do you walk people through that, or what tools do you offer them to help make sure they get their budget in line?
Yes, actually, after a person completes the Home Today financial literacy program, when we pair them up with a certified housing counselor, they actually look at all of those components. So they look at their income. They look at, do you get your nails done? Do you get your hair done? How many, if you have children at home, what are those expenses? So they look at them in a holistic way to really make sure that when they make that decision and of affordability, can I afford it, is more realistic. When you're looking at the bank doesn't identify or doesn't consider those ancillary expenses, right? Because everybody's ancillary expenses are different. So they look at the gross income. Well, we know we don't live off of the gross income.
Correct.
So that housing counselor, a certified credit counselor, they're going to look at your net income. They're going to look at what you have in your savings. They're going to look at your month. They're going to look at your utilities. They're going to look at everything and then put you on a realistic budget and based on your true affordability. At the end of the day, it's your decision to decide which route you want to go. But to set you up for success, we really advise you take the advice of the housing counselor because they look at the true picture.
Yes, absolutely. Making sure people are informed and that they have the proper information to make the decision.
Yes.
So let's talk a little bit about the boogeyman, the credit score. Let's talk a little bit about that, because we know there's so many myths and people getting advice from, family, respect to your family and friends, but the professionals about what can help your credit score, what can't, So talk a little bit about credit score and its role in getting mortgage ready and how people can get comfortable with coming to the table no matter where they are and getting that to a place it needs to be.
So when it comes to mortgage lending, credit score is certainly a component, but it's not the end all be all. It's credit score, it's income, and your savings. So if we talk on credit score, if you look at credit scores like a letter grade, and you're 760 and above, you have an A.
Mm-hmm.
If you're 700 to 760, you have a B. 650 to 700, C, and then you go on from there.
Right.
Now, you can qualify for mortgages if you have lower credit scores, but you're going to be asked to potentially pay more in costs, or it's going to require you to bring more money to the table up front. So the better credit score that you have, the best options you have for flexibility and making that home a little bit more affordable. So what you can do is you pull your credit report or use one of the apps, kind of look and see what is it that's bringing my credit score down. A lot of times it's just a lot of bills out there, a lot of just a lot of liabilities, or some things in the past that were behind that hadn't been taken care of. Pull that credit report, take a look at it, and resolve some of those issues, and you'll see that score climb.
Yeah, it's about getting comfortable. I know with credit, we all think like, "Ooh, I made a mistake in the past, and I don't want to look at it. I just continue to pay what I pay, and it'll just sit there, or it goes to collect." And sometimes financial situations we understand can warrant that you may not have what you need at the time, but even getting the information and understanding how credit works and getting involved with programs like A Home Today, getting in front of someone from like Third Federal to help you understand your financial position can be beneficial, because even if you're not looking at a home tomorrow, literally next week, you don't know where you could be in 3 months, 6 months. And a lot of times it's not as bad as we think it is. We think it's irreparable. Yeah.
So basically with credit, it's really basic. I've answered a lot of questions on credit. If you pay your bills on time, and you pay them off as fast as you possibly can, you will see a good credit score.
Let's talk about the other piece of no credit, right? Because a lot of times in our communities, we see people who, they don't have a proper checking or savings account, or they don't have a credit card. They're just paying their rent, they pay utilities, but a lot of times those are not reported to the credit bureau. So how do you help them at least to understand how building your credit? They may not have any credit. How does building your credit help them as well?
So if you don't have credit, the best thing you can do is get a secure credit card. You can go to a bank, put money up front as collateral. They'll give you a secured card that you use and manage like a credit card. When you manage that credit card, that secured card effectively, after a period of time, they'll give you that money back that you gave them, and you'll use that as a credit card. You can also report your bills to the credit report if those companies will allow you to do that. Like, so for instance, if you have a phone bill, you can ask the phone company, "Hey, will you report this to my credit?" You're paying utilities, you can ask whether utilities report to your credit.
Okay, perfect. So that's how you get it done. So let's talk about programs. So because you had your scale, your A, B, C, D, or ABC. We don't want to talk about D's and F's. You can't bring no D's and F's home, get in trouble. But talk about your programs. And, I come into Third Federal, I have a 640. I have a 640 credit score. What programs do I qualify for that? What products? We're talking FHA conventional, et cetera. And how do you make sure that people are in the product that gives them a competitive advantage in such a tight market?
Yes. So Third Federal, we offer only conventional financing. And a lot of folks look at that and go like, "Oh, well, then I'm not going to qualify." No, that's a myth, right? And so we've developed the answer to FHA. We feel it's better than FHA. Right?
Okay.
And so we have our home ready purchase product, which is only 3% down. If you're going FHA, what do you have? You got 3.5% down, right? And if you're putting less than 20% down, which is allowable at Third Federal, we allow you to put down as little as 3%. Well, yes. Will I have PMI? Yes, you'll have PMI, which is private mortgage insurance. And so that private mortgage insurance ensures that you're going to pay your mortgage, right?
Yep.
And in the event that you don't, the bank is made whole. However, on FHA, you have MPI. So that PMI is for the life of the loan, you can never get rid of it. With PMI at Third Federal, it does drop off after you reach a certain equity position within your home.
Okay.
So we feel that our Home Ready product is the answer to FHA, and it allows us to hand walk our customers through this journey, because it's not something you want to take lightly, right?
Sure.
And so we have associates who are trained to hand walk borrowers through step by step, and we're there from day 1 to day 30. Well, 360, I should say, after they've made all of those payments. And if you get in trouble along the way, we still have experts within Third Federal to help you through that process.
And I'll note again that the credit score isn't the end all be all. It's also income and what your savings are. So you can have an 800 credit score, but if you don't have the income, you're not going to get approved.
Yeah.
Or you can have an 800 credit score and you're looking to buy a $300,000 house and you want to put 3% down, but you don't have that money saved. It's not going to work. So credit is just not that. I want people to understand that it's just not credit. It's your income. It's what's on your credit report, and it's how much you have saved.
Yeah, it's a bigger picture, but we know credit score is what's on the forefront. People, I don't even want to go into the bank. I'm gonna ride right down Broadway and past Third Federal because I don't even want to come in and look at what they're going to tell me. I already feel rejected before I come in the door, but they're here to help. So let's start where we are.
And getting yourself educated through our Home Today program.
Yes, absolutely. Absolutely.
So I'm sorry, but I want to tell people that ignoring your situation is the worst thing that you can do. You have to face the music, right? And if you want to better yourself, it may not be buying a home. Maybe it's buying a car. Maybe it's paying for education. Maybe it's just getting out of that living paycheck to paycheck. But wherever you are, our Home Today program will help you through that. At the end of the program, if you don't want to buy a home or you're not ready to buy a home, we're okay with that. But we know that you've gotten the proper education and the tools to help you to be successful, whatever your long-time goals are. Absolutely. So they even help you set short-term goals and long-term goals. And so you just take the baby steps. So there's no pressure, there's no requirements other than being accountable, following the information that we provide to you, and all the benefit is to the customer.
Absolutely. Yeah, go ahead, Jason.
And that program is free.
Yes.
Free.
Yeah,
free. We love free. We love free. But we're all here. We're all realtors at the table. And again, we look at a holistic approach to homeownership in our communities and just want to make sure that everyone's educated and they understand that we're going to partner with people that's going to get you from point A to point Z. And we're going to hold your hand along the way. We understand that some people's situations, it's not, in 30 days. It could be 6 months. It could be a year. It's just staying engaged, staying involved in the process, going to Home Today, getting involved in the classes. You're going to have Jason's number. You're going to have Jennifer's number. You're going to be able to talk to them and they can help you along the way and get you partnered with the housing counseling agencies as well, HUD approved, and they're going to get you that credit report. And again, do they pull that for free for them? Is that okay? So that's a free benefit as well. So talk a little bit about the documents that you're looking at when someone comes in. So they come in, what do they need to have when they come in to even see if they qualify for a loan?
So if you work for an employer, you'll need your last 2 years of W-2s, not tax returns. Your last 2 years of W-2s, your last 2 pay stubs, and then any savings accounts, checking accounts, retirement accounts. If you list those on the application, the last 2 months of statements.
Okay. So you'll have to have those documents prepared. And then as you're walking through that process, and again, like you said, you have conventional products, et cetera. So let's say a person immediately, qualifies. They have the credit score. They have this. What are you doing at that point that they qualify? What will they be receiving from you?
So if they qualify for a pre-approval, they will get a pre-approval letter.
Yes.
And that will allow them to go and look for properties. Now, let's talk about pre-approval versus pre-qualification.
Let's get into that.
So the documents that I talked about is the documents we're going to require when you apply for a pre-approval. That means that our underwriters who are looking at your acceptability for this mortgage have fully vetted you. They're going to look at your credit score. They're going to look at your income. They're going to look at your assets. And they're going to say, from a credit standpoint, you can afford to purchase this house. And you can be guaranteed in that for 60-day time frame. You find a house in 60 days, you convert it to a purchase application. We're going to honor that commitment for another 60 days.
Okay.
Through your close.
Okay.
And with us, once you are pre-approved, as long as you didn't change your job or you start spending more on your credit, thinking that you were good,
yeah,
and I'm gonna go get a car now and get some more stuff, you're gonna be good to go.
Yeah,
as long as that house is worth what you're willing to pay for.
Yeah, we definitely try to let people know, like, the car can really ruin your chances of getting that home. So that's very important to know. Like, if you're considering between the two, go and talk to a loan officer, mortgage professional first, and to really see if that car note is going to, because listen, they'll let you off the line. You will be paying $800 for a 2012 the Altima. Okay. Right. Yeah. So you want to make sure that, you're informed making that decision. So you kind of mentioned about coming in and getting the rate. And I know recently, we all are aware that the rates have begun to come down. So if someone comes in, let's say they don't find a home, it's a tough market. They're looking for 60, they can't find anything. And let's say rates change again. What are you able to do for that person in that situation?
So when they apply for the pre-approval, it's locked in for 60 days. Once that time frame is up, and they have to apply again, what the rate is at that time. But keep in mind, we have the lowest rate.
All right.
So if you find somebody else with a lower rate, and we come check us out, because we have the lowest rate guarantee.
And then just again on the rate environment, because we've seen in these last 5 years, it's been some of the lowest rates you've seen to now some of the highest rates, within the last 10, 15 years, et cetera. And then we also see affordability shooting through the roof because of home prices. So just how do you, as mortgage professionals, get people comfortable with understanding, yesterday's rate or pricing or payment is not today's payment or pricing, but just ensuring that you're getting them in a product and a level that they have a sense of affordability when they do go into the market, so they can feel comfortable and confident. So just kind of talk about how you, with the lowest rate again in the game, the lowest rate in the game, but how you are making sure people are getting the best rate possible for themselves.
So it's always a good time to buy a house, because you're talking about something that will appreciate over time as you're paying down that mortgage. The rate may be higher than what you've been accustomed to during COVID time, but that was a unique time frame.
It was.
Rates are really consistent with where they were probably 8, 7, 10 years ago.
Yeah.
So, and you can always refinance as rates start to go down. If they slip under where you're at right now, there's always an option to refinance and kind of change the terms. I would tell you candidly that I had a 30-year mortgage, and then during COVID, I refinanced to a 15-year mortgage so I can save on the rate and pay off my house faster.
Yeah.
You can do the same thing as home.
And talk a little bit about that 15 versus 30 and what's the advantages or disadvantages there for someone.
Yeah. So the ultimate term is 30, right? 30 years, right? Which is 360 payments. So yes, that is the lowest payment you're going to have. However, if you decide and can afford a 15-year term, those are great as well. But what we like to do, especially with our first-time home buyers, we can calculate and amortize what it would look like. So we would have you take a 30-year mortgage, right? It's going to give you the lowest payment. But because their federal has no prepayment penalties on their mortgage products, we will say, okay, now, in the event times get hard, you can afford this 30-year payment, right? But I know you want to accelerate the payment. You want to get it paid off as soon as possible. Now, take the same term, same rate, and we're going to amortize it over 15 years. Now, this amount, this difference, we want you to pay that consistently every month. And as long as you can pay that extra consistently every month, you may pay a little bit more in interest, but you're going to have that safety net to know that no prepayment penalty, right? I'm paying extra on my principal. So yes, I'm saving interest at the end of the day, and I'm paying my mortgage off faster.
And that's what we want to do. We want to pay our mortgage off faster. We want to pay that mortgage off faster and making sure it's going to the principal payment.
Correct.
Make sure it's going to the principal payment.
Yes.
And just a little bit for those of our listeners who are actually homeowners right now, Jason, you hit on this a little bit. talking about the rate environment and refinancing. So sometimes you get in a home, you're like, okay, I got my first home. I'm cool. I'm gonna be here for 10, 15 years. But then you look, you're like, maybe I want to move. My family that, has changed, or maybe I got a job. I want to live closer somewhere else. What are some options for people who currently own, and how do you walk them through that process of, okay, I own a home. I want to get another home. Maybe I can't afford both payments. How do you walk them through that process?
Yeah, so there's a number of options when you have a house. It could be challenging sometimes to be qualified to carry one house, and then you're trying to buy a new house. So at Third Federal, we do offer a bridge loan product, which will pay off your existing property using the equity that you built up in it. And you can use a portion of that equity to pay for your down payment on your new house. And what happens is that payment on your old house goes away for that period of time. We're not going to require you to make a payment for 12 months. You have to sell that house within that time frame. But it allows you to leverage that existing house to help you get into the new one. Or you can just, apply for the new mortgage, and, as long as your income can satisfy both payments, then you just wait to sell that house. And then what you can do with us, which is kind of unique, is say you sell that house and you get, we'll just say $20,000 of extra cash after the sale. Now you're in a new house. You can take that $20,000, put it on your new mortgage, and we can reset your payment for you. And we would reset it for free.
Okay. And reset it for free. So there are definitely options in the housing market. I know we talk a lot about first-time home buyers, but a lot of times people do get in properties and they're not thinking, I got my first. They're so excited they get their keys, they got their first home. I'm going to be here forever. And you're like, oh, wait, I have a family. I got married. I got 2 kids now. Or, I want to live in a different neighborhood. Life happens. And so there are options that you all have to help people navigate even that process as well. So talk a little bit about, you've gotten pre-approved, so you have the power, right? You're going out, you're talking to your real estate agent, and you're like, look, I'm ready to go shop. Look at how much are you in communication with that agent, the person that's helping your customer navigate that process, and exactly what that relationships looks like between you two?
Yeah, so the relationship between the mortgage loan officer and the real estate professional is key, because if you're not properly communicating, no one knows what's going on in the transaction, and then frustration and anxiety increases. And so, yes, is there limited information that we can share? Absolutely, right? But the information that we can share really helps both the buyer, the seller, and the real estate professional who is who's managing the whole pot, right? And so we do communicate on a regular basis. We usually ask the real estate professional, what's your preference of communication? Do you want to text? Do you want to email? Do you want a phone call? Whatever the case may be. So one of the first things we'll let you know is that the person's approved, right? Yep. So if the person's approved, they're ready to go. And then once the customer is approved, the borrower's approved, now, okay, you guys are looking for a home. Right. And so now you're shopping around and you're looking for the mortgage, you're looking for the property, you find, okay, this is my dream home. This is it. Right. Then that purchase agreement comes back to the bank. Right. And so then we now say, okay, customers applied. Right. Next thing we'll tell you, okay, the appraisal's been ordered. The appraisal's in. All right. Good to go. Right. And now let's get ready to close. Right. And so then as we go through that process, all parties are in the mix, and they're all updated on a regular basis.
Absolutely. In real estate, we say time is of the essence.
Time is of the essence.
And communication is key. And so you just heard a vision. You got pre-approved through Third Federal. Your real estate agent, you are out shopping because you got the power with your pre-approval. They're talking in constant communication. Your appraisal comes back. Your house is worth the value of the loan or more. Hopefully you're in that equity position, and you're getting ready to close. So we just gave you a glimpse of what it looks like for yourself as you're on your home ownership journey. So just one more question for people who are listening and they're like, I just changed my job, or, there's been a change in my income and I'm getting all this good information today, but I don't know. Should I call Jason? Should I reach out to Third Federal? Should I talk to Jennifer? What can you tell them about that advice? I just recently got, a promotion in a different industry, or, I'm relocating and maybe, the job is a little bit less than what I was making before, but just how can they feel comfortable reaching out?
They can always reach out. I'm always available to talk. I'm passionate about financial literacy and mortgages. But typically, a bank is going to look for 2 years of income and 2 years of predictable income. So if somebody was, for example, they're working for an employer, now they become self-employed. That's a different circumstance than somebody that working for one institution decides to go to another institution and making similar amounts. If you make less with your new job, that's what's going to be taken into consideration is what's you're making now. Because it's going to average out mostly with a 2-year history. But if you take on a new job and you're making less, we're going to take the less.
Okay, got it. And just to touch on that really quickly for our small business owners out there, what do they need to bring to you to get pre-approved?
You need 2 years of tax returns.
Okay.
And then a profit and loss statement.
Okay.
For the current year.
Okay. And so they're showing you they're making all that money and you're like, you're good to go. Okay.
So,
I was going to say this. So let's
talk about it.
Let's talk about it. Let's break it down.
There is a tendency to not report as much income. Okay. You want to take advantage of all the tax
advantages. Yeah.
Well, a lender is going to look at what you told the government you made. So you may make $100,000 a year, but you told the government you made 50.
So that's what you're going off of.
We have to go by what you told the government.
Absolutely.
So if you're looking for a house and you're self-employed, kind of keep that in consideration when you're doing your tax return.
All right. So y'all heard it here first. Small business owners, report that income so you can get that home that you want. But is there anything, Jason, Jennifer, last information that you want to share with the people about, getting ready to purchase a home and or looking for their next home?
One thing I would just say is if you are having challenges within, your credit or your income, even though you're in that current stage of life, whatever that is, the time to start is now. I can't express it enough. Jason, we've been through the program. I've been through the program. I haven't always been where I am today. And if it wasn't for the program, I wouldn't have made the mental mindset shift. Yeah. Right. And to be able to own my home and raise my family and do the things without that pressure. That pressure it can really take you off your rails, right? Sure. So face it. It's free. Doesn't cost you anything. It's actually, Jason said, it's on Zoom. So it's at your comfy couch, right? You don't have to pack up the kids and put them in the car and drive across town. You just need to turn on your phone, your laptop. You're right there. And so that information is key. And meeting with that financial counselor, you have someone who you can trust. Yes. Someone who is an expert, someone who's not going to judge you, right? They're going to look at what you have and tell you realistically what you can and cannot do. And then you follow the path or you don't follow the path. And so depending on what your goals are, will determine your success.
All right.
And I would just say education is the key. Do not hesitate to ask questions if you do not understand. The home buying process is pretty complex. There's a lot of players involved in this, and it's the biggest financial decision that you're going to make. And you want to make sure you're making a wise decision. So if you don't understand something, please make sure you ask questions. If someone's not being transparent with you, go somewhere else.
Yes, absolutely. You have options. Thank you, Jason and Jennifer, for your time today, for bringing the information to the people on Secure the Deed podcast. We want to thank you for listening to us, and we hope that you spread the information and also tell people to listen to the podcast as well. Get enrolled in that Home Today program. They are here for you to help you start on your journey. If you currently own a home, they have options for you too. That's what we're about, sustainable home ownership and getting everybody to where they want to be. So thank you, Secure the Deed. We'll talk to you next time.